Hey there, welcome back to the channel. So I wanted to do a little stock update. I had done a couple, and I don't think I published them last week, but I just felt like looking at it today before tomorrow opens up. So we look at the S&P as tracked by the Spider ETF. You see that wow, it really was just pretty aggressive the last couple weeks. Really actually a fairly big day. So this thing is outside the top of its range. So you would expect a pullback or anything to happen here, because if you look at it, why is this so? You kind of have this channel running, right? And like when I do channels, I kind of cut that kind of stuff. And I know some people don't like, oh, you can't cut that off. And like, well, a channel is like the more points touching it, that kind of implies where the channel is, and the problem is like if you end up like including these extremes, and next thing you know, people are like, oh my gosh, it's it's what do we call it? It's coiling, or it's a wedge. It's a wedge. It's like, okay, well, maybe it just went out of the bounds for a little bit, but yeah. So S&P really strong. So the Nasdaq Composite, and that's the thing, it was really strong last week too. So the Nasdaq Composite, so this would be like the big tech, but as we'll see, like the some of the smaller tech didn't really do as well. Yeah, so looking at some of the smaller tech stuff, we can look at we can look at some of the high beta and stuff, and look at RK. So here's what we got. It's a lot of these guys in the EV space and sort of the, high growth, high beta type stuff. They still have not really recovered. Now, they put in kind of a W, but they've kind of like here, ARC, this one fell short of getting to the previous high, still below the 50. It's enough of a, recovery to pull the 21 days. So that's good. CCIV, Churchill, this thing is kind of flattening out down there. So that's kind of not like the other ones. And then this one, like Enphase. So this is like Tesla, and a lot of companies are like this. They kind of have this W, and then now we're in another W. Now here it couldn't. So the thing is, it's good that it's consolidating and it's recovered, but the thing is, it's consolidating below the 50. And yes, it's really good it didn't break down further. But the other hand, it's not able to break back up yet. So now it could just be consolidating and taking time before we make a breakout. Like now this guy, Arcimoto, this guy's kind of just really not doing well. GameStop hanging in there, but who knows? Neo, so similar to like the Tesla type style, once again held the previous low, but really didn't come up very much, really didn't make even much of a run at the W. Now, Tesla did make a run at the W, but couldn't hold it. So, all these guys, so, what's happening here is that they're consolidating under the 50. So, I mean, it still can recover. It still can, consolidate if it breaks out above this range. I mean, the good thing that you have is, you can see the range now, right? You can see like, hey, if it starts breaking above this 720 range, I mean, it should, it has a nice potential to really make a move above that. So if it gets above there, that seems like a really good place. It's not financial advice or trading advice, but that's a place where like, okay, the people that are overdoing it, usually people are overdoing it, right? So the people that like made money, yeah, shorting made money, and then they keep overdoing it and extending, just like on the way up, people are overextending, same situation, but somewhere at the 50, they're going to run for cover, so that's kind of the setup there. But so far it hasn't happened, right now it definitely, the damage that was done in this runoff from this highs and 880 all the way down to 560 at a low, it did enough damage that it's taking time for this to recover. So, thinking fast, thinking slow, looking at the 15-minute charts on that, you got to be careful because there's a bigger picture going on here, and the bigger picture is more important. So let's just check things like rates and stuff. So the 10-year, the rates kind of went down, but a little bit. But remember, they're still hanging out. It seems like it's starting to find a new home up in this 1.7% range here. That this seems to be the case. So, the market and everything is going to have to deal with that. Now, if you look here, it kind of like pulled like it was going to go lower, and then it kind of held. And this thing could gap down, and the rates could go lower, and that maybe would give things a boost. It could happen. Dollar, big turn. It kind of made this big turn down here, but it had been really downtrend. I mean, really strong, just getting the crap kicked out of it on the weekly. I'm in the weekly chart long term, but then last week it had a really strong down weak bar. So that should be positive for the market, I would think. But in the big picture, right, it's like a big correction and sell off into the cradle of the moving average, and that's going to be the question, right? So if you're looking at it here, if you were thinking of buying the dollar, it's like, okay, where's the support? Well, the support might be at the 50-day, this red line that's coming up, right? 50 starting to turn, coming up, and then you have support maybe down at 91.37. So you can see this could set up for, has a sharp sell-off here that could be a place that would, find support. So yeah, so that's kind of it for the market. XPEV, similar type thing. This one broke out of the W a little, but couldn't hold it. I don't know. I might buy some of that. That's just me, not advice. Just for the heck of it. As long as it's not around earnings. I don't want to be around earnings with these crappy companies that aren't making much money. Consumer staples, here we go. Look at this thing. So you can see that, like with the recovery last week of the Nasdaq, right, consumer staples stalled out. So it didn't really lose much ground, but it didn't really make much ground either. So you can see that you can kind of infer that there may have been a rotation from consumer staples into tech. But when you look at it, it went into, Tesla, I think, is big tech, but it probably went into more stable big tech, like your Google, let's see, your bigger, big tech. Yeah. See, look, see, it went into this like stuff like Microsoft and maybe Google, I would think. Yeah, Microsoft, Google. So that's what pulled up the Nasdaq average. Is some of these really, it went into the really, I guess you would call it mega cap, the really big tech stuff. So Tesla would be a large cap, I think, but they're not like in the mega cap range, I don't think. I mean, maybe they are. I don't know. But so that's where it went. So I think money was, finding a home is what it looks to be. You can see that. Let's look for the weekly and see where we're at. Yeah, like look at that move on Microsoft last week. And then Google, yeah, another big one. Now, I would look at Intel, but Intel, I mean, money went into there, but Intel's, they're in deep dog poo-poo. I wonder if like something like Adobe. Yeah, see, Adobe, like, okay, once again, Adobe isn't in this strong position. It's consolidating, but, like if you look at what happened in the last couple of weeks, there's some money, it appears some money moved into there. So that's what you see. You see some of these, some of that going on. So that's really then the question for, what's going on for next week. I don't know. I mean, if I look at like S&P 500, I mean, it's pretty overextended. So to think that we could have a really decent big pullback. Once again, look in the weekly chart, it would be totally expected that we could. I would think like, sure. I mean, if you had a 5% or 10% correction, you could have it. Sure. You look at Nasdaq Composite. This is really good because, basically they all kind of pull on each other. It's like very often these indices, you'll see an index and it will lag and it will lag and it can't, sometimes they're like a precursor to like a wider range of the market going down, but other times they're not. And so often what I would see is like in certain areas, periods of time, you're like, oh, the Russell is lagging and that portrays, the market's going to have a downturn. And no, it doesn't. I mean, sometimes it can for sure, but in general, it kind of doesn't. So very often it doesn't. It's like, no, this average lags, that average lags. And then they like suddenly boop, 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 pop up. Money will rotate in to be like, oh, that's value there. Whatever they're doing. I mean, money's just flowing around all over the place and stuff. So that's kind of what we have. So, I'm not a big, trader guy here. So I don't do too much, but, I sort of have the feeling I feel like I need some excitement in my life. So yeah, I'm looking at something like an XPEV. Like I'll go check and see if they're going to have earnings. I think that all these companies reported their. Well, I need to check, make sure there's no earnings or sales or anything coming out. If there's nothing coming out, so not financial advice for me. If I was playing this, I mean, really, the proper place is above this high, like right here. So here on April 1st, we had a high of 39.24, and that would be the place where you'd buy it. And imagine if it came up and through there, it would break through the 50 at the same time. So you have the people that are like, people overextending their shorts here. Where are they going to try to cover at the 50, right? Or they're going to just trail their stop based on, wherever the pivot points are, right? So basically, you have a pivot point here. This came down, it started going up, and it pivoted right there. It just turned direction, came back down, and then pivoted to go up and pivoted to go down. So like, if you're short, you're like watching for these highs. Like, okay, is it gonna, you don't want to give up too much, so you don't want to like hold short much beyond that point, right? And so that created some issues there. It looks like when it went up here, that some selling came in and drove it down. So maybe some short had some financial resources to be like, sell it down, just knock it below my point over here. So I don't know, but it's got potential to me. It looks like it. And so that would be one thing, just curious about. I think in the big picture, I don't know. This is a bull market like I don't think we've ever seen anything like this before. I know when I look at a chart like this and it goes back all this time, and we look and I try to explain. If I try to explain to you, say like how much of a crazy bull market was going on in the late 90s, it looks like nothing, right? It's like nothing compared to what's going on now. That aggravates me. Do as I ask you to do, chart. Yeah, like back here in the 90s, the tech run in the 90s, this thing was going hyperbolic, just going crazy, and then it just broke apart, and it took a couple years to break apart. But you look at that now, back here in 2000, you look at that, and it's like nothing compared to what we're in now. And so you just have to wonder, there has to be a reckoning at some point, but I don't know when. So I think that's it for this update. I'm going to go play some video game. So let me show you where I'm at in my world. Okay, I found some lava here. Ooh, don't fall in the lava. All right. Yeah, it's kind of interesting because you just know something's wrong. It's like we can't do this forever, but we're going to keep trying. It's very interesting because all this stimulus that they keep throwing into the economy, and I realized this a long time ago, and I think a lot of other people have too, that, back in, the 2008, what they call the Great Financial Crisis, which is nothing compared to what's going on now, nothing. I mean, the amount of actual Main Street pain that's going on right now with the basically just mortgage forbearance. You have mortgage forbearance. You have rent, basically eviction moratoriums. These things, and this is what I was thinking about too, and maybe we'll talk about it here. This is going to cause. We already have a situation where we have an affordable housing problem, right? There's not enough affordable housing. Housing is so expensive, and even when people aren't homeless, whatever, you look at what percent of their income they're spending on housing, and very often it's a very large percent. It's maybe more than 50% of their income they're spending on housing, and that's a very large percent. I mean, you do not have much money to buy food, shoes, anything else when you're spending more than 50% of your take-home pay on housing. And hopefully that's just take-home pay. I mean, if it's pre, then you're really in dog poo. But So that creates a huge issue. And then the thing is, well, what do you do about that? Like policy wise, what do you do about that? Well, the reality is there's not a solution to the problem right now. You have to understand, it's like, people come out like, well, we need to build affordable housing. Well, you can't build affordable housing. How do you build affordable housing? It's interesting. You talk to people that have built properties or apartments or even just small amounts where they take, and they go and they take a lot and they split it. And there's so much stuff that they have to go through. And it's very interesting too, because supposedly like even just getting like sewer hookups and stuff. I mean, these permits are like, you have permits and stuff that might be like $20,000 a unit. I mean, very large fees. So, you put that all together and all of the costs that it's going to take you to build a unit. What really happens is that, the builders especially are just like, look, we're building high-end housing because they're not going to build low-end housing. I mean, they'll do the bare minimum, in California. I think they have a lot of rules where like, oh, they have to build affordable housing, and it's not really affordable. I don't know what their criteria is, but it's like, okay, if they're building $1 million homes, maybe they make some $500,000 condos in the community or something like that. I mean, it's still not affordable. It's still difficult when you're starting out. Here's the thing. The problem is, like always, is what? The issue always is that, you sort of have to get a house. Once you have one, then you're on the treadmill. Right? You're on the housing treadmill. And that's where like, okay, the housing keeps going up, the value keeps going up, and it has gone down. I'm not saying it doesn't go down. I mean, I did live through the housing crisis. I remember going in these neighborhoods in San Diego area and just be like, wow, look at all these foreclosures and stuff. It is incredible. Just street after street of foreclosures. But, that is all gone now. I mean, that has all just kind of worked its way out. It was interesting too, because I was looking at buying one too. And I'm like, oh, I want to get in on this. But there was already bidding wars on the foreclosures. And because once the pricing came down, it came down very quickly. There's still so much demand there. So back to the affordable housing thing is like, look, there has to, like, I think the only solution that you can have at this point is that you need something more like, if you look, supposedly Japan has, and I've seen pictures of them and articles about it, where they have these pods, right? So basically the way it works, they have these hotels that are like pods. And, so basically what you're doing is you're renting a room. You're renting like a little pod. And so you don't have your own bathroom and stuff like that. But what you have is you have a little, basically, it's a little bigger than a coffin of a room that you're renting, right? And these are like, they're nice. They're not like in bad neighborhoods. I don't know that Japan has like what you consider bad neighborhoods, et cetera. But, it's a way that they can pack in the housing density and have a solution for you. And I would think that if you had different areas in cities, centers, and stuff like that, where you had, hey, developers were like, hey, I'm going to make pod housing. And, you could still have them be really nice. And of course you can make them safe too. Pod housing doesn't have anything to do with, you can still make them meet all the building regulations and stuff like that. The only thing that you have to do is you have to be like, okay, well, we're going to allow you to put a much higher density in, right? And we're going to allow you to do this housing, pod housing and stuff. I mean, that's one of the areas that would seem to me is like a potential. Once again, there are no solutions to problems. It would just be something that would move the needle in a direction of, being a positive thing for finding more people housing. And see, the key part of that is, people have to be, housing has to become to a point where it's like, hey, look, people working at different jobs can find housing that's at like, 25% of their take-home pay instead of 50 or 75. This is a key thing. It's only when you get it to a lower level, lower percent of their take-home pay that it's going to be effective in any way. And this would be one way to do it. And then, of course, you let entrepreneurial ship work this. You know, obviously from the regulation side, you make sure they're going to be safe. There's not fire hazards and death traps, but and you have safety precautions, you know, all this stuff. But on the other hand, too, it'd be like, hey, it'd be cool for especially younger people, be like, oh, I live in the pods and whatever. And they could just, you know, they can make up for it in the way they handle it in terms of like, oh, they have, you know, a lot of amenities for if you're targeting younger people, you have different amenities. I mean, you could even have it for, you know, older people, but it's a different set of amenities you provide. So that would be something that would help. I don't know that people, you know, thinking about that at all. I imagine like developers are like, look, they would never let us do that, so we're not even going to try to do that, and they don't have the imagination to do it. And then all the districts and you know, the places that you know, basically all the place, you know, all the communities where, you know, the building and planning committees, all that stuff, they would just frown on it like crazy, right? They'd be like, no, you can't do that. No. I mean, you know, it's funny because I grew up in this Newtown, Connecticut, and, you know, they had at that time, it was like, you know, minimum 1.5 acre lot. And so that's really cool. It's an amazing thing to think about, minimum 1.5 acre lot. You know, that means, you know, you're not allowed to build a house unless you have a minimum of 1.5 acres. And so what's really cool about that is things are really spread out, you know, and that's where I grew up, and it's really cool. I used to climb trees and all that stuff, and it's really great. But I mean, if you want to get affordable housing, you know, you got to find some kind of solution, I would think. And, you know, cities that like right now, like LA and stuff, and well, San Diego has problems too, but you know, LA has a huge homeless problem right now, and they're having all kinds of problems, right? They're like kicking people out of the parks. They're like, oh, we need to do maintenance on the park. Well, they don't need to do maintenance on the park. They're just saying that as a way to try to get them out because they can't. You know, it's just like, well, we don't want to just say that we need to kick you out because we're tired of everyone, you know, pooping in the park and whatever, but it's you know, there needs to be some kind of creative solution. And I think that, you know, I think like if you look at it from the Republican and the Democratic political side, I mean, they're both, you know, wrong from the perspective that like, look, you know, you need something in between, but we do need some creativity. And I think, you know, the government side could give more, and then, you know, the entrepreneurial side could give more too, in terms of finding a solution that would help. But the solution has to be something like right now you have to like totally change the dynamic. The dynamic just doesn't work. Like you can't build cheap housing, like at least in California, there's just no way. I mean, if they caught, you know, I mean, if you got $100,000 in permits and planning per unit, I mean, that's the base before you spent $1 on, you know, hammering a nail into anything. You know what I mean? And so that's the kind of base thing. So this is where everything becomes a problem, where it's like, okay, people don't understand, you know, the basics of business, and politicians don't understand that, and it's all politics, and then people don't understand that, and it just doesn't really lead to any kind of solutions to it. So I think that's it for this one. I need to go eat some dinner. So